Can you buy a home that needs work with a VA loan? The answer is yes, you can. It's called a VA renovation loan, and we have a streamlined way to make that work. We're going to talk about that in today's video. Hello, my name is Michael Florin, and I'm the owner of Low Cost Mortgage. Today's your weekly update for August 11th, 2026. Now, we've all been seeing what's been happening with the Middle East and with rates. And in summary, if there's more chaos in the Middle East, rates go up. If there's less chaos, rates come down. A lot of that has to do with oil prices, supply and demand of money, and also if there's instability in the markets, rates will go up. They're very conservative in that regard. And if there's stability, rates come down. So the more stability that happens in the future based on what's happening in the Middle East, sure, that could drive rates down quite a bit. But if those rates come down, that's going to be in the future. So we've had this instability, stability thing kind of flip-flopping a few times, or I don't want to say flip-flopping, but it's been changing a few times. So that means that when stability is perceived to arrive again, it might take a little longer for those rates to stabilize and start moving down again. Good news though is we're still in the fives. So if your buyers are government and VA or FHA and they still need a rate in the fives, we're still there. Again, that's no points or no discount money or origination points to get there, but there's a big difference between a low cost approach and the average approach from most mortgage lenders. Again, we're still in the fives. Most others are not. Conventional for us is middle sixes, like right smack dab in the middle. Quoted quite a few deals out today, and for no points or anything, it's right in the middle. I don't want to give you an exact interest rate, because if I do, then I have to go into disclosures. So government in the high fives and conventional right at the middle sixes, if you know what I'm saying. VA rehab loans or FHA rehab loans, renovation loans, renos, however you want to call it. For VA and FHA, there's a way to buy a house or refinance a home where you can do renovations to the home. And it's actually quite a bit that you can do. You can do a new roof, you can do painting inside and outside, you can redo the kitchen or bathrooms. There's a list of what you can do. That means you can buy a home and that home requires work and you can still close out on an FHA and a VA loan. But there's special considerations when you're going under contract on that type of house. First and foremost, regular VA purchase or FHA purchase, VA, you're looking at 3 weeks, maybe 4, depending on how complicated the buyer is. Now remember, the bottlenecks on a loan for VA or FHA or any loan type is borrower docs and appraisal. Well, now we're introducing a third potential bottleneck, and that's the contractor. So on a contract time frame for VA or FHA rehab loans or reno loans, you want to go 60 days, maybe 45, and it's going to depend on the scope of the project. If you need the sewer system replaced or the septic system replaced and that's it, that's pretty fast, that's pretty easy. Closer to 45 days will probably work. But if you're going to remodel the kitchen and paint the house and do the sewer line and do the roof, you've got more complications there. You probably need 60 days, 60 days on that contract to be able to close that loan. Everything else is pretty much the same as a regular VA or FHA loan, except the contractors, you want them to be on that HUD approved list. We have access to that list, and it makes it work really well if they are. You could use other contractors, but it complicates it so badly. So for example, if you use a contractor that's not on the HUD list, guess what? They have to get approved on the HUD list. Well, what does that mean? That means financials, that means good accounting, a CPA, etc. Most contractors aren't set up that way, but the ones on the approved list already are. So that's why we default that way on those types of loans. Other considerations are flexibility. Sellers, listing agents, they both have to be flexible. There might be some third-party complications that slow things down a little bit. So if we're doing a renovation loan or reno loan, we need to make sure that the listing side is a little flexible, the sellers are a little flexible. If the sellers have tight time frames, you don't want someone to buy the home with one of those. But if the sellers are a little bit more flexible, like a lot of sellers are nowadays, that could be a good possibility. So for you realtors out there, where you have VA buyers or FHA buyers and they're just not finding anything that they like, because it is a buyer's market right now. This is an extra tool. It is, hey, remember that house you saw that needs a roof or that needs a remodel? Then this might be a good possibility. Let's look at it with a VA loan. And you don't know, that might help you get some guys off the fence or some buyers off the fence. Interest rate wise, renovation loans are more expensive. So currently, if today, our VA rates are currently in the high 5s. Well, if it's a Reno loan, or then you're looking at, I think it was like lowish, midish, lowish 6s. So there is a hit to rate for that. But at the same time, it allows that buyer to get in, buy the house, renovate the house, and later on do a VA refi or FHA streamline. What is the other one? Oh, scope of project. Now, on our website, by the way, there's a link for VA rehab loan, renovation loan. Look that link up. There's a lot of details in there. I'm going to put up a copy of the page here. There's a lot of details in there as to what are the considerations of and some of the things you cannot do. One of those considerations that's pretty important is 6 months time frame. The renovation has to be concluded within 6 months, and usually you're looking at about 2 or 3 or so, not 6 months. But 6 months is the cap, okay? You also have dollar amounts of $100,000, $200,000. So if it's less than 100, very easy, very fast. 100 to 200, a little bit more complicated, a little bit more meat in there, a little harder to do. If it's over 200, it goes to management review. Management review means somebody looks at it and says, okay, what's the scope of the project? Well, if it's over 200K of repairs and the home purchase price is 300, it's probably not going to work. But if it's 200K of repairs and the purchase price is $1 million or $1.5 million or 800,000, it's a possibility that probably could work. This is your weekly update for August 11th, 2026. Hopefully you get out and nudge those buyers. Right now is the buyer's market. It is good pickings for buyers. And you can just plan on doing a refi later. That's been a pretty big thing right now. Purchase now, refi later. We've seen a lot of killer deals come across the pipe with seller concessions. Sellers are just spewing a lot of concessions. So for your buyers, potentially really good idea to go buy right now. Why? Because sellers are giving away a lot of stuff to help smooth the deal over to sell their home. Anyways, it's Mike Florin, Low Cost Mortgage. I'll talk to you later. Have a great day.